This is something that has been requested in the past, and this is something anywhere that we can try to help you as groups, as individuals, working with groups. We're for it. That's what we're here for. For those of you that don't know, my name is Vince Feeling, and I'm one of the technical assistant specialists at CCO, along with Kinley Henson and Brad Wagnon, whom I'm sure everybody knows, the author, the man, myth, and legend, Brad Wagnon. But today we're going to talk a little bit about financial responsibility, and we're going to kind of go over some basic bookkeeping practices. And this is just going to be very, very basic stuff. It may be a refresher for most of you all, but this is going to be very, very basic. But if anybody has any questions during any time, please feel free to ask. So with that, let's go ahead and get started. Kind of look at what we're going to be talking about, our wins and whats. Our objectives for this is we're going to look at the treasurer's duties, specific duties, overall general duties of a treasurer, what treasurers should be doing, how they should be doing it. That's one thing that we're going to be looking at. Internal controls that should be set up to pretty much help avoid money management problems, help avoid trouble within the group whenever it deals with money. A lot of times whenever there's money involved in a situation and there's a group of people, there's usually going to be some disagreement on how money is spent or how it should be spent. And that's just common nature. That's just something that we all have to deal with. At some point in our lives. So we're going to talk about the internal controls that we can use to avoid a lot of this, avoid it getting into a hostile situation. Looking at basic bookkeeping practices and looking at using those books to actually create some basic reports for our board meetings. So that's pretty much what we're going to look at. Hopefully everybody came here for this. This is what we're going to be talking about today. So with that, let's go ahead and dive into the general duties of a board's treasurer. Now, this kind of varies from group to group. Sometimes treasurers in one group wear a lot of hats. Sometimes groups are a little bit more established and they have more members that can help out with different things. But this is the general duties of a treasurer. Pretty much, really, it's just making sure all the financial operations take place in an appropriate manner. There's ways and methods to do things, and whenever it comes down to your finances, and that's what a treasurer really does right there, is making sure all financial operations take place in an appropriate manner. Following customary financial procedures, some people call them generally accepted accounting procedures. We're not going to get too much into that because I myself am not an accountant, but a lot of times whenever training's on this, you can get bogged down into the details, but today we're just wanting to keep it simple. We're just wanting to keep it simple to where you can actually go back and implement these in your group as easy as possible. Keeping good records, showing where the organization's money comes from and where it goes. That's another duty of the treasurer. The reason for this is for transparency. You want your organization's members, you want your community to know that your organization is on the up and up. Your organization is transparent, and that really helps with the organization's credibility. When people see that there's a lot of transparency in a group, they're more apt to actually help that group with either donations or more apt to help that group with volunteer work and stuff. So that's one thing that you want to do is It's not just the treasurer's job to be transparent, but it's the entire board's job. But transparency is the key. That's something that we really stress that every board has to have is transparency. There's not too much of this. You cannot have too much transparency. Looking at some of the specific duties to be an active member of the board of directors. Whenever you're choosing a treasurer, make sure that they care about your organization. That kind of goes into integrity, but you can also lump trustworthiness along with this. Trustworthiness. Do you trust the individual handling money? Are they a good person? You in your communities, you know your communities, you know your people more than us. So whenever these are things that you have to think about whenever an organization chooses somebody that's going to handle their finances. Make sure that they're trustworthy. They may not know how to do any treasurer's duties, but if they're trustworthy, they're honest, and their integrity is impeccable. Honestly, it doesn't matter. Skills can be learned. If they don't know how to report anything, if they don't know anything about financial reporting, that's something that can be learned. Those are skills that we can help as a CCO. We can help teach those skills. Those are skills. But trustworthiness, integrity, honesty, that's something that can't be learned. That's something that just can't be learned. But all the skills, everything that we're doing here today is something that can be learned. Treasurer has to take custody, has to be the custodian of the finances, manage the funds, to keep full and accurate account of all income and expenses. This is a really important duty because if you don't keep an accurate account of everything, how do you know how much money your organization really has? How do you know? Let me ask a question here. How many people in here, and of course you don't really have to answer, but how many people in here know exactly how much money they have as a person right now? And I'm not asking for finances. How much money you have as a person? Okay. Does that include the change in your pocket? Does that include the change in your car door? The change in your couch? Does it? Okay. Jokingly, a lot of times we have more money than we know about. Whenever it comes to organizations, whenever it comes to a treasurer, that really can't be done. You really have to know the finances down to the penny, down to the cent. It really is important. You cannot sway on that. You can't know a general idea. It's really important to be able to know exactly how much money an organization has. Can't stress that enough. It is important. To manage the financial records with discretion. Whenever you're managing financial records with discretion, the way I look at it is, and this is just not the duties of a treasurer, specific duties of a treasurer, this is duties of the entire board as well. If there's, say for instance, maybe a fundraiser that a board is trying to do, thinking about doing, and there's an initial investment that they have to put up, maybe buying supplies or something for this particular fundraiser, and the treasurer, you're looking at the books and you may think, I don't know if this will work, because a lot of times what will work in other places may not work for your organization. Just because one organization made quite a bit of money doing a particular fundraiser in one area doesn't necessarily guarantee that those results are going to happen within your organization in your area. So if there's something, I guess a gut feeling, if you have a gut feeling that it may not be a very good idea to try this particular fundraiser or to do this particular purchase at that time, That's your discretion if you are the treasurer. The discretion of the fund. Let them know your opinion. Let them know why you think it might not be a good idea. And that goes with the entire board as well. If there's something there, just let them know that you may not think it's a good idea. So that's something that the entire board needs to be doing as well. To report financial conditions to the board for periodic review. I would say that every time a board meeting happens, whether it be a regular meeting, special meeting, or in some cases an emergency meeting, there needs to be a financial report ready for that particular meeting. Because a lot of times whenever you're calling a special meeting, or if you're having to call an emergency meeting, most times you're talking about something that you're probably going to have to buy, that you're probably going to have to use finances in order to take care of. And that goes with keeping accurate records and keeping an idea of how much money that you have, pretty much down to the cent, is very important. To provide an annual treasurer's report to the board. That's just another one of the periodic reviews that we're talking about. Do it monthly, pretty much every time that your board meets. Have a report ready.
I have a question on that one.
Yeah.
Can it be like an annual review? Is that what you're talking about?
Yes, it can. It can. It can. Now, some groups deal with more money than other groups do. I understand that. But yes, it can be an annual review. Now we're going to talk about avoiding money management problems. A lot of these are your internal controls, and these are something that really should be in your policies and procedures of each individual organization. A show of hands, I just want to take a poll here. How many organizations actually have written policies and procedures? Awesome. Awesome, awesome. Yes, that is very, very important. And whenever you're talking about internal controls with your money, especially, you really need this stuff written down. You really need this stuff written down so you can show other people why it has to be done in a particular way. You have to go by those policies and procedures. Internal controls. Let's avoid some money management problems here. First one. First of all, you need a bank account. Your organization needs a bank account. Sometimes it may seem safer, depending on the economic crisis that we may have in this country, to save it in a jar and bury it. But you really need a bank account. The organization needs a bank account. What are some of the reasons why an organization needs a bank account? Anybody? Just
that transparency.
That's right. That's exactly right. But let's go ahead and see what I got written down here. One, you have to deposit checks. Yeah, without a bank account, it's a little bit more difficult for an organization to deposit checks because you don't have any place to deposit to. So you have to have a bank account. To protect your money, with bank accounts, banks are federally insured by the FDIC. Do we know how much exactly on top of our head? How much they're insured to? About 250. That's kind of what I was thinking. About 250,000. So yeah, if something happened to the bank burned down, the bank got robbed, somebody just walked in and just took money, your money's safe. Your money's insured. Your organization's money is insured up to 250,000. To provide a paper trail. Paper trails provide transparency. Cash. Does cash provide transparency? No. Cash is cash. Cash is cash. It does not provide transparency. So one thing that the banks really do is whenever you do deposit it in there, you can actually have a really good paper trail. That way you could prove as to what was purchased. You could actually prove that the money was deposited in the bank. These are all checks, pretty much. They're checks for your organizations. A better word for like the actual check would be a safeguard. This is pretty much protecting your organization's transparency and protecting the people that handle the money in your organization and protecting the organization's board. That's pretty much the reason for all of these things that we're going to be talking about here. Protecting the organization's board, protecting each other. And to set up a system that allows a new treasurer to step into an established routine. I'll ask this question. Do we have any treasurers?
Oh, yeah.
Okay. All right. Out of all the treasurers that were in here, is there anybody that didn't have any, I guess, prior knowledge, like extensive knowledge about handling money and reporting before they actually got the job? Yeah. It's tough, isn't it? It's tough. I mean, whenever an organization probably, I don't know, say for instance, they just hand you everything, maybe a box of receipts, just like here, you're the treasurer, here's this bag, here's a box of receipts, take care of it. It's tough. It's tough. That's one thing that you want to do. You want to establish a system that would help a new treasurer. Just in case that, say you're the treasurer and something happens, you can't devote the amount of time that you want to the organization. You know, life happens. Things happen in life that we actually have to take care of. And a lot of times we have to let other things go. And that's one thing that we should have is something that's established. Yes?
I'm having difficulty finding a proper bookkeeping ledger.
Ledger, yeah.
No, you probably
I
can't.
just, yeah, and you know, we've got to draw on here and draw on there and make our own, but is there one that we can buy that you know?
I've actually seen some at Dollar Tree. I've actually seen some at some Walmarts. Not all, but some. They're still out there.
I'll look at Dollar Tree.
Office Depot. Ladies over here said Office Depot, yeah.
Office Depot, they deliver. You can order online.
Oh, yeah.
They deliver for free.
Oh,
All right. But yeah, it's good to have a system set up. Yes, ma'am.
I'm not the treasurer, but I guess they trust me enough to deposit the money for them because everybody works.
Right.
But
Right.
when we have our wrestling, you know, two or three people count the money.
Yeah,
And then they just give it to me in the bag.
of course. Yeah.
We recount it when I take it
Yeah.
to the bank.
And that's up to the discretion of each individual group.
Also, will the banks give you a money bag?
Yeah.
Then you have to buy it.
There may be a
If
fee.
you're an organization, on most of them, like in Westfield, they'll give you a bag.
That's what we bank.
Okay. Yeah. So
We
yeah.
can vouch for having it in a bank because we've kind of gone through that kind of a situation.
Mhm.
And when the treasurer became ill and had to quit, we found out we had a lot of records that she had not kept.
Yeah.
And we had to go back to the bank and get all of the information. A lot of it.
Yeah. And it goes back to make sure that there's a system, and keep it simple. That it's you're wanting to get onto a routine. And when I say a routine, you know that the bank is going to send statements once a month, and you know when they're going to send it. Get into that routine. Yeah, routine. You have a routine going, and if you have to turn the books over to somebody, they can actually step into that routine. And if you have everything itemized, have everything organized, it just makes it easier for those individuals that are given the treasurer's job. It just makes it easier on them. And they don't have to take as much time to try to learn how to do stuff if you already have it in place. They can take that time and actually do stuff with their organization to help their communities. So that time doesn't have to be used to actually learn stuff, you know. And skills such as accounting and the basic stuff that we're going to go through, those are all things that can be learned. But that's very important right there. And on the flip side of that, I know there's some groups that probably have had members, organizations that have been in power for a long time. Don't be afraid to relinquish that power to somebody else. You know, let's keep this going. You know, but yeah, let's just keep this going. So that's why we have to have a bank account. All these things right here. Another thing is make sure that your checks require 2 signatures. Why is that? Why would we want a check to require 2 signatures on it? Accountability, and I like to say protection as well. Protecting yourself, protecting the person that handles the money, and protecting the organization. But accountability is pretty much it. It's really good to have at least 2 people that actually know what's going on. Yeah, and on this, banks can do this. They can make checks that actually they can print checks that actually have spaces for 2 signatures. If they say they can't, you can actually, as an organization, go out and have your checks printed. I've had checks printed from Vistaprint before that are really good checks. You can actually go to Harlan Check, Deluxe. All these places can print checks that would have 2 signature spots on them. If your bank says that they can't, they can. They can. There may be a fee, a small fee, but your bank can. And it's very important to have this as a safeguard.
Vince?
Yeah.
Vince?
Yeah.
Did you realize that if that has 2 signatures, that it will go on through, even if it's not who's supposed to sign it?
Yes. Yes. If it does have just 1 signature, it will go on through. It will go on through, but it goes back to the accountability of the organization. Yeah.
We just put both signatures on one line.
Yep.
That's worked for us.
That's worked for you all? Yeah.
Ours is underneath. That's exactly underneath.
But it's very important that you have 2 signatures on a check. That way, if anybody comes to question it, they're not just questioning one person, they're questioning 2 people. And those 2 people would know it would be more on the up and up as you would. But yeah, it's good.
Can I ask you something on that? Our accountant signs one and signs the other. You recommend not to have that, or have like just board members sign it? And
That's a good question. What do you think, Brad? We'll call Brad on that one.
Either way.
Either way.
Most organizations don't have an accountant, so.
Yeah. Yeah. There's. Yeah.
If you do have an accountant, that's fine, but, yeah.
I'm the accountant, I'm not authorized to sign checks.
Yeah.
Me too.
Now, the accountant and treasurer, Vince is gonna talk about that.
Yeah. Yeah.
The
Thank you.
president's not allowed to sign either, so they got 2 other different ones, right?
Not necessarily. The main thing that we want to talk about today is the treasurer themselves shouldn't have signature authority, pretty much.
The treasurer shouldn't have signature authority.
that's fine.
Well, they should.
The treasurer themselves should not be able to write and sign checks.
That's why I was asking about the accountant, because our accounting handles all our, like, they, so the
The president can sign. President can sign a check. The main thing is the person that is over the finances, the treasurer, should not have signature authority. And this is just a safeguard. This is a check. If you want to say checks and balances, This just keeps the treasurer's office in check. Okay. Another thing is the treasurer could keep the checks, the actual checkbook, and if a check is ever required to be written for something, a monthly bill or something, the individuals that have signature authority with the bank would request an actual check from the treasurer. So you have a check on the treasurer, and then you actually have two other people other than the treasurer that actually know what's going on and what's being spent, what the money's being spent on. So, but
Even if the treasurer is a board member?
yes,
So the president
Especially if the treasurer is a
are
board
not
member.
represented.
yes, I would say that. Yes,
It just keeps the treasurer above reproach.
yes. It protects the treasurer. Yeah, it protects them. It has another protection, and it protects the transparency of the treasurer.
Let's just say you have 5 board members, okay? So if the treasurer doesn't have signature authority, but the treasurer holds the checkbook, you have 2 other people that have signature authority. They have to request the check and sign the check. That's a majority of your board members right there, 3 that know a check has been requested and what it's been requested for. So that just keeps, that is just a safeguard for the board and for the treasurer to know what the money's being spent on.
That sounds really good, and in most cases, it probably would work well, but in our group, we're scattered everywhere, and so it's
Yep.
really hard to bring 2 people together when that check is needed now, and the bills come in at a certain time and they need to be out. So it's really hard to do that.
Yeah.
This is in a best case scenario.
That's what I was hoping
Right.
for. Right. Thank you.
But
Yeah.
that makes it, if you don't have the 2 signatures on the checks, that makes it even more important for the treasurer to make sure that every time that everybody does get together, that they have accurate report so that everybody knows what funds are being.
Our treasurer brings that with her every time she comes, and she has a printout for everybody. So we all know where our
We're
money's
sharing
going.
with you guys best practices, best case scenario, this is what should happen. None of these things are, well, not none of them, but a lot of these things aren't codified into law. These are just best practice.
Okay, thank you, that's what I wanted to hear.
Yes, yes, yes.
Well,
Whenever you open the bank account, you will have the signatures, the signature card at the bank. Yeah, and
with our account,
yeah,
my name is not on any of them.
yes.
I have no authority. I can deposit all the money I want to,
Mhm.
but I can't find out anything about it. I can't ask if a check has come through, but they will let me order checks.
Yeah.
He's younger, it's not personal.
Yeah. And honestly, that's actually pretty good. I mean, that's a pretty good setup there.
But if it's in your bylaws that the president and the treasurer sign, then
Then you have to go by.
Then you have to go by your bylaws.
Yeah.
Yes, you have to go by your bylaws.
Yeah, and if you wanna change that, then you have to change your bylaws. You have to go through the process.
And that goes back to all of this stuff that we're talking about here. If groups want to utilize this, it's easier for them to have it in their policies and procedures, because your policies and procedures can be changed a lot easier than the bylaws of an organization. So you have to go by your policies and procedures, and it's very important that every organization has written down policies and procedures.
I'm trying to recall my bylaws in my head. But if it's not in the bylaws and it's in the policies and procedures, how are we?
That's where it should be.
That's the way it should be.
Yeah,
Oh, in the
your,
policies
your,
and procedures.
Yeah.
your financial practices should be in your policies and procedures,
Okay.
Yes.
not in your bylaws.
Right.
Okay.
Because bylaws are, like we said, they're harder to change. If you come to a point where you don't want a certain person to have access, then it's gonna take you at least 2 months to change your bylaws, whereas policies and procedures can usually be changed by a vote of the board, simple. So all you would have to do is put it on the agenda to change the policies and procedures and then vote, so it'll take you less time to do that. It's important to have both written bylaws and written policies and procedures.
All right, this is great, y'all. Healthy discussion. Questions? This is awesome. This is what we're looking for here. All right, let's move on. This right here, we may get some more questions on. What do you think that says right there? What do you think that means? Debit cards. Very strongly recommend that you do not use debit cards. Okay, now there are certain circumstances where a debit card would have to be used by an organization. Does anybody know what some of those might be?
When you order equipment and stuff.
When you order equipment online and stuff, yes. What else? Don?
I just been doing that, and they authorize it, and I pay for it, and then they pay me back.
But yeah, there are certain circumstances where a debit card has to be used. But for the most times, day-to-day, monthly, month-to-month operations, there's nothing really that you can't pay with a check. We very much recommend that you use checks for paying when you can. And if it is required, let's talk about debit cards. If you're ordering equipment online, purchasing online, yes, you'll have to use a debit card.
How about a credit card?
Or credit card.
Because we use that all the time.
Okay. Yeah.
So we pay it off by the end, like we buy,
Right.
and we pay it off
Right.
at the end of the month.
Right. Okay.
And we have to show our receipts.
Of course,
When they
yes.
print it, we show
Yeah,
everything.
everything has to be accounted for. Yes, that's fine. Another time whenever an organization would absolutely have to use a debit card would be whenever they're applying for their 501c3. Yeah, organization has to have a debit card whenever they're applying for their 501c3. But other than applying and paying for the 501c3 fees and actually ordering things online, if an organization does have a debit card, they need to really watch that debit card. The treasurer can actually hold the debit card like they hold the checks, but it's recommended that anytime that debit card needs to be used, there should be something that tells who is given the debit card, what the debit card is going to be used for, and pretty much all the documentation that you would need, even minutes. If you need to purchase something, you need to go before the board to say that you're going to purchase something. And then the minutes. Debit card sign out of some sort, could be just a notebook, and that way we know who the debit card is going to and actually why the debit card is going to be used. Pretty much those things really safeguard the debit card usage. And whenever it comes to debit cards, it's very convenient. It's really, really easy to just swipe instead of writing a check. And that really gets dangerous to pretty much not just organizations, but, if you ask my wife, it gets dangerous to me. So, but, it's just, you're just going to swipe, you're just going to buy without really thinking about exactly how much that you have. So,
And that end, I would recommend purchasing cards, because that's what we're looking at, is purchasing cards, because you can put a limit. Your treasurer can put a limit on how much you spend.
Yep.
And it's like a credit card, but you get cash back. Right? It's like so the amount that you spend, you get like 1% back.
Absolutely. But if you do have to use a debit card, make sure that there are safeguards in place. Make sure that there's ample documentation as to who's using it, as to why they're using it, and so on. Okay. And the treasurer can actually hold the card as well, just like the checks. All right, moving on. Review the bank statements. Why would we want to review the bank statements? What's one reason why you would want to review your bank statements? There's many reasons, but what are some reasons? Balance. Yes. What else?
Make sure that everything that's on there has been approved in advance.
Absolutely. That is a good one. Transparency. Everything that is purchased for an organization has to have prior approval. It has to have. You can't just go out and purchase just on a whim for something. Everything has to have prior approval. What else? What are some of the reasons why?
Banks make mistakes.
Exactly. Banks make mistakes. Yes. Banks make mistakes. And that's one thing that you want to be sure is that you have a certain amount of money. You have the right amount of money. You know, banks do make mistakes. In the end, it's not a bank. It is a person or a person messing with a computer, but in the end, there is a person involved somewhere, and they can actually make a mistake. People are not perfect. Yes, ma'am?
Yeah, I have one mistake that they made. They put my account on, well, I had on some checks. And what they did is they put my account on checks of the Project Aid Association.
Mm.
And so everything that I was getting, it was going through my account.
Yeah.
Yeah.
Exactly. Yeah.
I have one.
Yeah. Yeah. That's one thing. Yeah. Make sure everything has prior approval. And if there's something fishy in the bank statement, go to the bank as fast as you can.
What did she say happened?
Go ahead and.
I wrote $100 out of my own account, and they took it out of the organization account. And the organization secretary came in and said, why did you take $100 out of here? You know, when the bank pushed the button, my name came up more than once. They just took it out of that organization. They just took it out.
Yeah. Mistakes happen.
I have a question though, on getting prior approval. We're a big organization. that has a lot
Yeah.
of
Big
stuff.
organizations are a little bit different.
Supplies and stuff, what do you recommend on that? Because I go out, like, I gotta go Thursday and get, I don't know what I'm gonna get, because I have to get supplies for our summer camp and food and snacks. So I don't know exactly how much I'm gonna spend or what I'm gonna spend. So how do you recommend getting prior approval on that? Because I spend a lot throughout the year.
Our blanket amount.
Yeah, there should be a blanket amount,
Okay.
and it should be over the amount that you would ever think that you would spend.
Well, see, they have on my card, my credit card, I can only spend 5,000.
Right.
So is that the blanket amount?
No, there should be a blanket amount for particular activities. So if you're saying you're gonna buy stuff for the summer camp, there should be a blanket amount that the board has approved
For that
for you
amount,
to
okay.
spend on that activity.
Yeah, because right now they're not doing
Basically
that.
not to exceed this amount, and that should be noted in the meeting minutes. That this is the amount. That way, if, you go over that amount, there's a check, there's a balance there that you say, well, they approved me for this amount. And if you need to go back and get more things, then there needs to, because you're going over the amount, then you need to have that approved as well. It's basically whatever the board is comfortable with you spending. If they're comfortable with the fact that you can spend $5,000, then they need to state that.
Yeah. Well, that's 5,000 for everything. Like
Right.
if I have to book travel expenses,
Right.
it's all through. And I never usually even go.
That's
over
why
2,000.
it's so important, again, to have accurate accounting at every meeting of what you have. To say, I think I'm gonna spend $2,500 on this activity, buying supplies, but then we have also travel that we have to book, this same month, that's gonna cost $3,000, then you're over your $5,000 limit.
Yeah, and see,
So
that's why they upped it, 'cause we were
Right.
at 3,000, and then I'm the one that has to pay for all the hotels, all the airfare, all that. And so there's been times that I've actually went over because of that, and I've had to call it up.
Yeah, that needs to be, it just needs to be approved as a blanket amount for that certain activity.
Okay.
But getting back to the root, review your bank statements. It's very important. Review your bank statements. Handling cash. This is one thing that everybody is going to have to do at some point in their life. But whenever it comes to an organization, there's actually safeguards that you need in place in order to protect your organization, protect your organization's cash, which is protecting the organization's assets. Say, for instance, organizations can have petty cash. They can have petty cash, but the cash must be in a lockbox with a fixed amount. And the organization's board would determine how much that fixed amount would be. Okay. That is all at the discretion of the board. And they could raise it and they can lower it at the board's discretion. But they are the ones that determines how much cash is going to be needed if there is petty cash needed. And for instance, why would you need cash? Why would an organization need cash, a certain amount of cash on hand? Fundraisers, yes. You need to make change. Maybe you're selling food, taking attendance, buying tickets, selling tickets. Yes, there will be times when an organization will have to have a cash box. So we're going to talk about actually ways that you can protect your organization and the people that are handling the money with this. So the person with the custody of the cash box, actual physical custody of the cash box, they really need to use 3-part receipt forms for documenting transactions. Everything that goes in, everything that goes out of that cash box needs to be documented. Everything.
So how about a yard sale? How would you do that?
A yard sale. Explain.
Okay, so we do an annual yard sale. We have it.
And once again, there's some organizations are a little bit larger than others. So
we have it every year. We partner with the Mason Slot, and they match up to $1,000.
Right.
And so we have a yard sale. We have it's bake sale, potluck, yard sale.
Right.
And so we have our set amount, and then people come in and pay. Money's going in and out. We don't have
receipt. You got to. You have to document it. There's no way around it.
Somebody buys a quarter pair of shorts.
Right.
5 cents. That
Yeah.
would take forever.
That would take forever, but that's a safeguard. Whenever you're talking about maybe a fundraiser or something, if your organization has a petty cash box, there needs to be documentation of everything that goes in and everything that comes out. Yeah, boss.
So what if we didn't make the petty cash box, we just go have the yard sale and leave the petty cash box at home?
Yeah.
Could do it.
So we provide the petty.
So my suggestion is that you write a receipt, you check so much out. Let's say you're gonna have a yard sale. Okay, we need $50 worth of change. You're gonna write the receipt for the petty cash box for $50 for the yard sale, have your receipt in there, then you take the $50 and go get your quarters and your dimes and your dollar bills. And then once it's over, you write another receipt. You don't have to write a receipt for every quarter item, but you need to note how much money you have taken out of that cash box for that fundraising event. The receipt needs to be there for that.
Now, that's what we did when we had our fundraiser for our centennial T-shirts. Nancy got the money that we would have to do the transactions with those people buying the T-shirts, and then we noted the amount that was taken out and what we received and so what we made.
As long as there's good documentation that explains what you've done, what is coming in and out of that petty cash box.
Yes. Documentation is key. It is key. That is your proof. If somebody asks questions, people handling money, there's your proof. If you don't have proof, if you don't have documentation, it kind of looks bad on the organization. It could look bad on the people that are handling the actual cash.
Those receipts, are they just 3 copies, or what does that mean, 3 parts?
Yeah, 3 copies. Yeah. Carbon. Some more tips for fundraisers here. Don't let the money wander away. Money can walk away. It can. If there's money laying somewhere, it will move. It will. Collect cash at only one point. Say, for instance, you have a fundraiser, and you sold admission, you charged admission. Make sure that you have it where the people are coming in and they're paying their admission. Have it in one spot. Don't have it in multiple spots in the building. Have where they have to pay for admission in one spot. It just makes things easier. Now, you can have admission in one spot, and then you can actually have concession in another spot. But make sure that there is just one spot for each individual place that you have. A place for concession that they go pay. A place where they pay for admission. A place where they pay for this. A place where they pay for that. Make sure that there is just one spot for each individual place that you're talking about. Collect cash at only one point. Make sure that there's a paper trail. How do we make sure that there's a paper trail? With documentation. Make sure that cash has proper documentation. Yes, however you do it, make sure that cash has some sort of documentation. 2 people should be with the cash box at all times. 2 people. Why? Why should there be 2 people at the cash box at all times? That's right, so it doesn't walk away. It's just another safeguard for the money, another safeguard for who's handling the cash, and that's just another safeguard for the organization's assets. Make deposits immediately. Let me share a story that I heard recently. There was a group that were actually doing something, day-to-day business, I guess, and there was a person that was handling a cash box, and she decided to take it home, and her intentions were really good. She actually took it home, and she was really caring about this cash box, which is what a person should do, because whoever has custody of the cash box, they are liable for all that money that is in there. Yeah. So she took it home, and she put it in a place where she didn't think that her husband would ever find it. She put it in a place, I guess, where hardly anybody goes these days. Well, she put it in the oven. In the broiler underneath the oven. And she went somewhere, or she was doing some work around the house, and then she came back in and her husband was there. She didn't think nothing of it until she saw that her husband was eating a pizza. Her husband decided to cook that day, and there went all that cash. All that cash was burnt to a crisp. So it's very important to try to make deposits immediately. If your bank has a night deposit type situation, use it. Use it. That's just another safeguard for your assets of your organization. Make your deposits as fast as you can. You probably can't make them that day, but just make them as soon as possible. Yes, ma'am.
Our organization has in there within 10 days.
Mm-hmm.
But that's to me, it's long.
I would say that would be too long. I say make those deposits as soon as possible. Exactly. Where's that money going? What's happening? Don?
Well, we put ours in an envelope, we see people count it every day.
Mhm.
We put it on our calendar as well as a notation with the money.
Yep.
I don't take it to the bank, and it's about 12-mile drive from my house to theirs, and I don't go to Kansas that often, so I won't do it. I know I'm responsible for it, and if anything happens to it, I'll have to pay for it, and that's fine with me.
Okay.
So,
Right.
I live with that.
Right.
And we live with that.
Yep. And that goes back to the policies and procedures of each organization. Yeah. But as we said, that this is like in a perfect world type situations here. And everything has to be kind of modified to suit different organizations because they have different needs and they do different things. So we say make deposits immediately. That's where CCO stands on that. So you make your
If
deposits.
we got a big check, I would do that, but we don't take in that much per day,
Correct.
you know,
Mhm.
so.
Yeah. Make sure you keep it simple. Keep it simple. Don't need anything really hardcore. Just keep everything simple. Yeah. And going back to keeping the money, the fact that you document it is really good.
We
Yes.
document it in the senior center itself.
Mm-hmm.
We write it up on the calendar, everybody can see it.
Yep.
I have records that I put in back files. I keep the money and I make sure it's deposited by the end of the month, every month.
Yeah.
And that everything balances, but, I
Yeah.
realize if any of it comes up missing, I'm responsible for it and I can live with that.
Yep. Documentation is key. Documentation is very important. Very important. So moving on, basic bookkeeping practices. Conference of Community Leaders is coming up. Coming up right around the corner. I know I've seen a few names that have already registered for that particular conference, but we asked, make sure that everybody has registered. I believe the number is 500. Is that the number that we're?
Yes, we maxed out at 500 people. So we need everyone to register as soon as possible to ensure that we have room for everyone that's coming. It's for food purposes. We have to have everyone register online.
And we can get you the link before you leave here if you have not yet registered. It's real simple. Real simple.
Is it in the book?
I believe so, yes. Yes, the link should be. I believe so.
Will you have the information if we have all that?
Can we check to see if
I would.
our names are there?
Yes.
I think we have. I didn't say I was, but I hope it is, because I did register.
If y'all want, you can just email me or give me a call, and then we can make sure. But yes, I can definitely check that out. Yeah, we should. Yeah. And we also have the newest edition of the newsletter, the CCO newsletter. Make sure you pick up a copy in this box right here. All right, let's move on. Basic bookkeeping practices. And once again, when I say basic, this is very, very basic stuff here. Very basic stuff. We're going to get into basic bookkeeping practices, and we're actually going to get into basic financial reporting practices. And there's all kinds of ways that you can do these things here. These are not set in stone. Each organization can take it, use it, tweak it to what works for them, but I believe that these will actually help those organizations that actually need help in this area. It's very important for your basic bookkeeping practices. All right, let's talk about the basics. What do we talk about when we're talking about the basics when it comes to bookkeeping practices? The main thing that I've stressed is you record all transactions. Everything has to be recorded. I cannot stress that enough. That is for the protection of your group's assets, the protection of the people that actually work handling the money, just protection in general. Make sure everybody is protected. Make sure everything is recorded whenever it comes to your money. Keep expenses and income in separate columns. Your debits, whenever you're talking about debits, whenever you're reporting, your debits are what you are subtracting. You have a debit card. What does the debit card do to your money in your bank account? It takes it out. Your debits. Make sure that you have your debits as to subtract and your credit. If you're crediting your income, that is a plus. It took me a while to learn this. I was kind of up in age before I actually realized what the difference was in these two. So I ain't gonna tell you how old I was, but we'll just say that it took me a while to realize the difference in these two. Keep a running balance. Why do you have to keep a running balance? Why should you keep? Exactly. So you know what you got. So you know what you have. So you know where your organization stands financially. It's very, very important to keep a running balance. Identify all transactions clearly. You can do this in your ledger. Anything unusual, even, like maybe reimbursements to some people. And we'll get into that when we actually fill out a ledger. We're actually going to be filling out a ledger example. But anything unusual, write it down. Write down what it was for. Write down how much it was. Give an explanation. Make sure that you have no questions whenever somebody would, question you, and you would have that documentation there. This is what it was for. This is when it happened, and this is why it happened. Explain everything. Identify all transactions. Keep and identify all receipts. Whenever it comes to receipts, a good rule of thumb, general rule of thumb for daily business, month-to-month business, keep those receipts for 5 years. After 5 years, you can toss them. But keep those receipts for 5 years. Whenever it comes to anything that deals with your land or deals with the organization's building, keep those forever. Yes, keep those forever. Forever. Anything else, keep up to 5 years. Setting up a ledger. All right. We are going to set up a ledger. It's not difficult. It's very easy. And let's get to it. So this is pretty much a simple ledger, and you have the actual exercise that we're going to do in the handout. That's pretty much what you see here. Yeah. Oh, you didn't get a handout. We got one right here, man. Did you sign in there?
I didn't see.
Oh, both? Okay. All right. Not a problem. Let me get you one here. But this is on the handout, and we're just going to walk through it. Pretty much the expenses for a month for a community organization. So we're just going to go through and do this. All right, so whenever you have a ledger book, a ledger page, they're all formatted differently, but really what you really want to look for is a place for your date, place for your check. The description area is very important. We'll get to that, especially for those unusual things that we're going to be talking about. And your minuses and your pluses and your balance, pretty much your running balance. Okay, so for the first one, beginning of balance, April 1st. The organization had a balance of $400. The beginning balance should equal the ending balance of the month prior. Should. If it doesn't, something's awry. You have to scope it out and investigate, but it always needs to equal the same amount from the month prior to this one right here. Beginning balance, we had $400. We had somebody come and give us $25. It was an anonymous cash donation. We deposited that on April 2nd. That brought our account to $425 because we are adding it to our account. We had another deposit. Brad Wagner, the man, myth, legend, author, he wanted to rent our building for maybe a book signing. He just wanted to rent our building. So, we got a building. We're going to rent it out. Let's make some money. He rented it out and he paid with a check. He paid with check number 5876. It's always good to write that down. And even whenever you deposit stuff, some banks actually send out, I know Arvest does, sends out printouts of checks and stuff that you have deposited, But it's always good to actually write down the check numbers that you do have. And every time that money is coming in, anytime income is coming into your organization, it's always good to have a receipt. So we gave him a receipt. The receipt number was 631 for the $100 check that he gave us for building rental. So always document it. Documented that deposit. The next day, not to be one-upped, Tammy Miller rented the building. And she did the same thing, but she paid with cash. She paid with cash. We took the cash and we deposited it on April 16th. We also gave her a receipt. And so on. So we got $625 here. Let's pay some bills. Bright Light Electric Company, $75. Monthly electric bill. We paid that with check number 351, and we paid that. It was $75 right there. I use parentheses. That's one of the general associated accounting practices that I've come across. I've used parentheses. I've also worked for C&E, C&B, and they use this too. Some of them do. But you don't have to. You don't have to put parentheses in this column. Just make sure that you have them in different columns. And just make sure that you are subtracting and adding properly. That's pretty much the key. Make it simple. Once again, make it simple. Make it simple. Make it to where you can understand it. And you don't have to have parentheses. On the 19th, we had to reimburse Kinley Henson. Reimbursement for cash payment of propane due to no organization checks available during delivery. How many of us live in a perfect world? I mean, every single day is great. Things go our way. Things happen the way they're supposed to happen. We're happy all the time. Jobs are great. Everything's awesome. How many of us live in a world like that? How many of us don't? Okay. Nobody lives in a perfect world. I don't live in a perfect world. My world's great, but it's far from perfect. And whenever we talk about our organizations are in the same world as we are. Not everything works as to plan. So, for instance, we had to reimburse Kinley Henson, so she was a member of our organization. Say she was a board member. And we reimbursed her because she paid $150 for the propane. Whenever the propane came, there was a bill of $150, or else they wasn't going to leave any propane. We needed the propane. So she went ahead out of her own pocket. She paid cash. And she got the invoice from the propane distributor. And then she took the invoice and gave it to the treasurer. And then the treasurer went ahead and reimbursed her the money that she had. You know, anytime that you do something out of the ordinary, anything unusual, it has to be documented. So look at what we did here. Reimbursement for cash payment of propane due to no organization checks available during delivery. Yes, ma'am.
Reimbursement at like the next day,
Could be, yeah.
or does it have to go through a board meeting for reimbursement like that?
I'm looking at this as an emergency situation. Say the organization has already decided to purchase the propane. There's no question there. There's no question. So, for instance, the person that actually had the check requested it from the treasurer. Maybe they had a flat or a cow was in the road and they couldn't go past them. I don't know. You know, the thing is, they weren't there whenever the propane was delivered. Something happened. They weren't there to give them the check that had already been approved by the board.
She just paid for the propane.
She just paid for the propane, and then in return, the board pretty much gave her back the money. You know, trying to help each other out here. That's the main thing. But anything that's unusual, any reimbursements really would cause people to question certain things in your organization. If you have a lot of reimbursements, as long as they're documented, it's fine. But whenever people see, oh, we gave this person money, reimbursement, why? People will start to question. But as long as you have documentation, proper documentation, everything's fine. And make sure, and you can use as many lines as you want. You know, you find a ledger book, use as many lines as you want to explain what happened. You know, you don't have to write really small. Use as many lines as you need to. Document it. Document it. On the 19th, made an insurance payment. What could go wrong? Insurance company. Building insurance payment. And it was $353. $20 brought us down to $380. The board wanted to have a fundraiser, so they brought the fundraiser to the board, brought the idea to the board. They wanted to have a chili supper. And so the board went ahead and decided to give them $100 to buy the supplies that they needed, the meat, the paper goods, everything that they needed. The board went ahead and approved $100. So they went out and they purchased everything that they needed, wrote a $100 check. So we're going to actually talk about this here in a little bit, how to report an actual fundraiser. But the board approved $100, and it did come out of the general fund. So this is the general fund right here. If you have or are getting any of our grants, the COTA grant, community work grant, it's important that you have, if you're not using a program, a computer program, or some sort of program, Excel, or however you're keeping track of everything, it's imperative that you have them then in separate accounts. It's very important because whenever you look at those, money can actually get mixed up in your general fund and banks. Yes.
When you just now said that it has to be in separate accounts, I questioned that right at the beginning, and I was told we needed to keep it all in one account, which is really hard. But that, you know, I always thought it was supposed to be separate, but I was told it didn't have to be.
I know that community work, it's required because it's a larger.
Well, ours is not a community work.
You're just caught it. You're just caught it right now. Yeah. Banks.
It's highly recommended because and we've seen it, I see it every day. Organizations look, and everyone's not knowledgeable about what the grant was written for. They get it mixed up with their general funds. So we recommend, it's not required for COTA, but we do recommend it for community work. We require it's a separate, but we do recommend it. It's too hard to get mixed up in your gen funds.
That is one thing we do. We have at the bank like 4 different accounts.
Yeah.
So that we keep $5 in an account to keep it open. So if we ever have a grant or something special like that, we can put that in that particular account and keep it separate.
The key is keeping the money separate because you don't want to be spending monies that are allocated for a certain thing. You don't want to, if it's a community work grant and you're supposed to be building a place, you don't want that money to be going to buy meat and chili and stuff. You want to keep those funds as separate as possible. So sub accounts with banks, I believe most banks would allow sub accounts. You can keep different accounts. So it's very, very highly recommended that happens. So this came out of the general fund here. $100. Yeah.
What you might do is, like, we have a separate account for the grants, and we also put that PO number on it, because normally they like to see that on their checks too.
Mm-hmm. Yep.
And it makes life a lot easier.
Yep. So 428, bought some stuff for the fundraiser. And the last entry that we're going to do today. On the 29th, we made a deposit from the proceeds from the Chili Supper fundraiser. We deposited $150. And now we have an ending balance for the month of $430. So this right here, for next month of May, that is going to be the beginning balance, and it always has to equal. Always has to equal. If not, as I said, something's afoot. Got to investigate it. So we have this ledger right here. Yeah, this is cool. This is exactly what needs to be done. But we also need to report this to the board. So treasurers have to report. They have to make a report. So we're going to kind of go, oh yeah. Another thing too is you can make all the debits red. That's just another thing. Make sure that it's easy for you to understand. So this is just some things that you can do.
What if they didn't use all the $100 and they returned the money?
Then there will be a deposit. You would put that money back. Yeah. So for this particular thing, they did use, but if they didn't, they put it back. So. Well, financial reporting. And this is, once again, this is very basic. This should be the next page that you have. So we're looking at the community organization. This is the treasurer's report for the general fund. Now, if you do have separate accounts for the general fund, for the COTA grant, for the community work grant, you will have to make reports for each individual account. So each account that you have, if there's been any activity on it, if there's any balance in it, any activity, yes, you have to have a treasurer's report for each individual account. Yes, ma'am.
That can't be linked together.
It's not recommended.
Our organization is very confusing because I think they could have a couple and it's all together.
Right. I don't recommend it. I recommend that everything, if you have separate accounts, everything, a report for each particular account. That's what I recommend. Boss, recommendation?
Yes, I agree.
Okay.
Concur.
So we're looking at the general fund right here. And all of this information that we're going to be listing here comes straight off the ledger that we just did. Everything is on here. So you want to start with the beginning cash balance that we had in April. That was $400. And then you want to do your income. What came into the organization? What came into this account? So you list them all. Donations, building rentals, fundraisers. These can be really, really simple. If there's any questions about these, then the individuals that are questioning it can go back to the ledger. They know who paid, how it was paid. That's why you need to keep documentation. So make sure of that. So we have that. We have the total income of $375.
All right, we have the income. So let's look at what came out. The expenses that we paid for this month. And we, once again, list all the expenses. And we total that as well. Total of the expenses paid was $345. All right. So that left us with the ending balance of $430. All right. Now let's talk about this fundraiser that we did, this chili supper. This chili supper fundraisers. Any fundraisers should have a report as well. Should have a report. And this is one way that I've seen numerous churches do this. I've seen them. This is where pretty much I got this idea. And it's a really good idea. So we got the fundraiser report. And the fundraiser was on the 28th of April. One thing that you want to see is approximately how many people were there. Now, if you're selling tickets or charging admission, this is a must. You have to know exactly how many people were there because that's going to go into your figures as well. So we had the attendance at our fundraiser of 200 people. We sold tickets. We sold everybody a ticket for 50 cents. Gave us $100. We sold $150 worth of refreshments, and we actually had a silent auction. We had a silent auction that net us $200. Total those up. So the fundraiser got an income of $450. We actually were lucky. George Strait was actually in town, in between the BOK and the American Airlines Center. And he knew about our organization. And he said, yeah, I'll help your organization out. He did an impromptu acoustic show. He said, instead of the $1 million that I charge and that I make, I'll do it for $300. All right. So we decided to go ahead. You know, the organization had a special meeting. Okay, he's here. You know, what do you think? Let's do this. They agreed. All right, $300. And then at that meeting, they determined that they would actually pay the $300 out of the income that they had for pretty much everything. They was going to pay him after everything had been counted because George Strait's just going to just chill out with us and stick around all night. So payment for the band, payment for George was $300. Always write a receipt. If you're going to be paying in cash, write a receipt. That's important. That's very important. But what's also important is whoever you're giving the cash to, they give you an invoice, a receipt, or something stating that you as an organization paid in cash and it is signed by that individual who took, who gave the cash. So that's documentation. So we give George Strait an invoice for $300. He looks at it, cool. We give him the money. He signs the invoice, paid in cash, gives it to us, and then we give him a receipt for his cash. Documentation. Yeah.
Question on a small scale.
Right. Right.
If you have a little money and you're doing the exchange of hands, but the person you're giving it to goes, I don't have anything, I don't have a receipt. Could you take the next receipt in your receipt book and have them fill it out back to you with their signatures? I mean,
could you elaborate a little bit more?
Well, the person that we're likely to pay like that's not gonna have a receipt.
So they can write it on a piece of paper.
okay,
Just
so,
as long as it has all the information that they, how much you paid them, their name, the date, what you paid them for.
okay, just anything.
And you give them a receipt.
Okay.
Your vendor should be furnishing the invoice.
Yes, they should. But George didn't have. He didn't have an invoice. He has accountants, but yes, vendors usually do. Always make sure that the vendors do have an invoice, and if there's a time and place where there is no invoice available, yes, write it down. You just got to make sure that you document it. How much it was, what it was for,
what it was paid in, and then sign that the individual paid or got paid, received the money. Yeah. So just make sure that everything is documented. So this right here, they decided during a special meeting to go ahead and pay him $300, and coming out of the income of the proceeds of the fundraiser. So we didn't have any more expenses. It was just George. So that was $300. That left us with a total of $150. Now, most of the times I've seen where places stop here, and that's usually fine. But what you could do to help your organization even more is actually go a step further. Remember those supplies that we purchased for $100? We purchased meat, paper goods, and all that stuff. A lot of times, whenever we purchase stuff like that, we might not use it all. Okay, and if we don't use it all, the organization still has it. List that down there too.
That's not your supplies that you paid for prior to this year. Doesn't that go under expenses?
Yeah, shouldn't that be an expense?
I wouldn't put it under there because it came out of the general fund. It's documented in the minutes that they wanted that. Yeah. It's documented in the minutes that they wanted to buy supplies.
But you actually didn't make $150.
That's right. We didn't. How much did we make? $50. That's right. But if we have a small community, and for instance, we actually did have 200 people coming to our fundraiser, that was a success in itself. You know, a lot of times on paper, this didn't make any money. It made $50, but a lot of times, you know, you think don't look at the numbers to determine. Well, you have to look at it to determine if it was a successful or not fundraiser as far as raising funds. But on paper for this one, it really wasn't that great of a fundraiser. But look at how many people showed up. Look how many people learned about your organization. Look how many people. Those are potential donors. Those are potential volunteers for your organization. Yeah. Look how many people had a good time. And also, back to those supplies, whatever's left over, list those on the report. Yeah, list them. Because whenever you do another fundraiser, you have these to start with. So you wouldn't have to purchase this much. You wouldn't have to purchase as much materials and supplies to begin with. So you do this. So technically, we'll say that this all adds up to maybe $25. So technically, we made $75. I mean, we have 75 in assets left, you know. But yeah, are there any questions? Are there any questions? But make sure everything is documented. Yes, sir.
You know, some of the ones I've done in the past, we also add other information on, like what other events were happening in the area.
Yes.
So next year, you can either plan to do it before or after. That way they don't, because like instead of getting 200 people, maybe we only got 100. And then next year we did it after and we got 200 people, then we know to do it after that.
Oh, yeah, they look at it.
That's right.
Right. But yeah, events that happen in the area or special events like that always make a bigger difference. So you try to remember those for next year. What made it better? Was it raining? Was it clear skies?
Did they like the stuff? You know, what you chose from your menu you had in there?
Yeah. Yeah, that's awesome. That's a great point.
What sold the most? You know,
Yeah, you can't keep enough notes because you'll lose them by next year anyway.
I don't know. We kept ours every year. That way, when we went back to the calendar year, we could look and see what we did, so you know what to plan for the next year.
Well, actually, you will keep these notes because these will be submitted. Yeah, they'll be submitted with the treasurer's report.
That's that ideal situation we were talking about.
Absolutely, yes, that's the perfect world situation there. All right, well, that is pretty much all that I have. Once again, thank you for coming to this training. It's been a privilege. Any more questions anywhere? Awesome.
Thank you.
Thank you for coming.